Welcome back to another episode of Multifamily AP 360. And today's our guest is Sharon Riddle from Excalibur Investments of Texas of LLC. So welcome, Sharon.
Well, thank you, Rama. Really appreciate being on your podcast today.
Awesome. Thank you very much. And a little bit about Sharon. Sharon began investing in single-family real estate in 2005 with her husband and business partner, Dan. She took a leadership role in managing all facets of the business, including property analysis, acquisition, rehab, property management, and resale of properties. Sharon, with her business partner Dan, started transition to multifamily real estate in 2015 through initial education and investing passively in 18 properties in Texas, Oklahoma, Colorado, Florida, and Ohio, totaling 3,500 plus units to date. So with that, Sharon, you want to add anything to your background?
Well, just so your audience knows, I am in a couple of masterminds, and that's kind of added to my community. Not only the community that I started with Brad Sumrock and his personal mentoring community, but it's also added another level and another layer. So I am in Millionaire Multifamily Mastermind with Brad Sumrock, and I recently added a second mastermind that's going to help me really on my capital raise journey more, and that is Raise Master within Hunter Thompson's organization.
Awesome. Thank you for sharing that. So you started into real estate 2005, initially with single family, then switched towards multifamily. So what makes you invest in real estate?
Well, it's another stream of income. When we first started the first company, which was single family, we still had some W-2 jobs. So that gave us a second stream of income. And it still does. My business partner, Dan, has his W-2 position in aerospace. So I am the real estate professional. This is all I do, talking to a lot of people about real estate, investors, podcasters, and others. But we ended up pivoting in 2015. And the reason why we did that is for the scalability that multifamily brings us. And so we began then, and I've invested, well, up to 18 properties now. But you have to really think about the cumulative effect of that, because this is 2024 now. And I started very well at a small level, but I was testing it out. So Dan and I were testing it out to see if it worked. Well, it was working. And so we were able to invest more and also redeploy assets from our single family business as those properties sold into multifamily. And we have created more than one company in that time.
Awesome. Thank you very much. Thank you for sharing that. So what are some lessons learned from investing into single families?
Well, the lessons learned from single family is, well, it can't scale to the level of multifamily can. And I will say it was really a good experience because we were working with a team. I self-managed. And also that was the first point in time where we worked with private lenders. So that working with individuals as private lenders as your bank, in some ways, really helped us cement in our minds the syndication meaning, because that is a larger scale version of working with private lenders. You know, we had an SEC attorney, you have that with syndication, and really syndication at the most simplest form as far as its definition, it just means a group of people that are focusing on that business plan, and they're investing with you in a property, and they're just on board with the business plan of the property and of the sponsorship team.
Got it. So in single family side, have you done syndications, or you guys did yourself?
We really utilized the private lender model.
Yeah.
And we utilized that in the 2008-2009 time period because there was such a credit crunch, such a crunch regarding debt.
So what is the maximum interest rate you guys paid during that time?
Since we had private lenders, the maximum that we did pay was 8%. That was the maximum because, we were paying out a distribution. That's really what we were doing. But, we weren't constrained with how many properties we could acquire.
Yeah.
That was the point. Not only certain banks weren't lending for real estate investing.
Yeah.
But also, you were limited to how many loans you could get. And really working with private lenders, you were unlimited.
Yeah.
And that's what we liked. We wanted to be in the unlimited space.
Awesome. Coming back to multifamily space, so far you guys invested 18 plus multifamily syndication as passive investor. So how many are went full cycle? So what kind of returns you guys achieved? And share me some lessons learned from there.
We've had about half of the portfolio go full cycle. So out of 18, we have about 8 or 9. So about that much. And we've had 3 times the return on some investments. Now, not all investments are created equal, as well as some submarkets and markets aren't all created equal. So some of the lessons that I have learned is really stay true to your conservative underwriting. Whether you're looking forward to being on a general partner team or whether you're a passive investor, that's one of the things you should really look for. And I would really look for it in these times because of all those interest rate increases, because you want the sponsors, your general partners, to be really focusing on the fundamentals very, very seriously and stay consistent with that. Because many people, when we first were multifamily investors in 2015, 2016, it wasn't really that hard to make money. It really wasn't in that time space. Now, we're really having to go back to the fundamentals. And the sponsorship team are really, really required to be strong asset managers. If they aren't, they've got to develop that skill very quickly and stay working very closely with the property managers so they can really maximize the returns as quickly as possible for the investors.
Awesome. You touched multiple good points. We'll start with conservative underwriting side.
Mhm.
What exactly conservative underwriting according to you?
Well, according to me, it really is the price that a property is acquired for, and also what is their business plan? Because if they have a business plan that is going to mirror what brokers are recommending in the operating memorandum, in that, it probably is not conservative, because I have discovered over time, and so has my partner Dan, that they'll want you to improve all kinds of things that really are not necessary. If you're conservative, you're going to leave some improvements for your buyer in your exit strategy. So you're not updating and upgrading everything. You're leaving something to a future buyer of your property, and that is going to make that property more attractive. Also, it's a time where you can totally complete what you have as part of your business plan because you've limited your scope. You're not going to be everything to everyone. You're only going to focus on certain items in your business plan and execute.
Got it. Yeah. Thank you. So in 2024, how exactly will approach or how exactly you do your due diligence for multifamily passive investing?
Okay. In 2024, one of the things that I am going to continue to ask sponsor teams is, have you had a capital call? And I'm just letting your audience know that I'm going to be asking that. Those are, while they're not extremely frequent, they are on the radar screen more than they were when I first started investing. So, has there been a capital call? I'm also going to be asking, where is all the funding coming from? Is the funding coming exclusively from a syndication, or is it coming from a fund or preferred equity? Because the syndication investors are going to be really the last to really get their investment. They're last in line. So I'm going to be asking those kinds of questions very frequently. And I did not ask those in the early years, but I will be asking, where is the money coming from?
Got it. So if they have preferred equity partner, do you invest into those deals or you don't?
I would have to really talk through the whole preferred equity scenario with the sponsors. I would really have to have a full understanding of what that is going to work like in their particular property and on their deal.
Got it. Yeah. Thank you. So from you explain from sponsor point of view. So what kind of due diligence you would perform from market point of view or property level?
Due diligence?
Yeah.
Okay. Well, of course, I would expect that they would be hiring a company in to perform due diligence, first of all. And I would expect that all or most of the team, the sponsorship team, is or are walking the units. So they're going to be walking every single unit with the due diligence company. So that's what I'm going to be really expecting.
Okay, got it. So last 2 years from market point of view, we see like inflation, higher inflation, and also higher interest rate. They are impacted, overall, net operating income, right? So income wise or expenses wise. So in this kind of scenario, so what kind of communication you had with, your sponsor? What exactly you're expecting from the sponsors?
Okay, well, I'm expecting more communication. I mean, I am a person who does read her monthly reports. So, first of all, and I encourage all of your audience who are passive investors, read those monthly reports and do not be timid about calling your sponsor with anything that you do have a question about. A lot of times, if you call versus sending an email, you can be clear in your communication regarding that. But my calling is much more frequent, and I've always called. But if you see something, especially regarding that occupancy level, this is one of my red flag areas, because I like my occupancy to be at least in the 90s, like maybe 90. I'd really prefer 95, 98 as far as that range. That's what I really like. But if they're certainly if they're in the 80s, they're going to get a call. So there's just certain items that I'm going to call about. And also, if a sponsor sends me a video versus a webinar, I'm going to call them because there's no contact. If they choose the option of sending a video over a webinar, you can have a chat, everybody can ask questions. And so that's kind of a red flag for me. I'm automatically going to call them.
Got it. Thank you. So what are the 3 things you would look in a monthly report?
In the monthly report, well, I've described the occupancy already, because occupancy drives everything. So since I have actually developed financial reports myself in my previous career, it's one of my cross skills. I'm going to look at expenses, and I'm going to look at the income all the way driving down to the net operating income. So I'm just going to look through the report as far as all the drivers. And then I'm going to look to see if there was any property management changes, because that normally affects some things. And if there was any unusual event that occurred, because sometimes general partners don't call you if there's been a fire, there've been some water restoration issues, and you've got to discover it in the monthly report. I'd rather people just give me a call and say, hey, we've had this event. But look for the events too.
Got it. Yeah. Thank you. Very good points. So would you share any best passive investing experience so far?
Well, my best one went 3 times, and it was a property in Duncanville, Texas. It wasn't super big, but it was just one of those undiscovered gems. And despite a fire, that investment went 3 times in 30 months. And that was in the 2015, 2016 time period. So our scenarios, as you well know, is different in 23, 24. But that was my favorite one, just because it brought that high degree of return back to the investors in the shortest period of time. So that's still my winner, even though I do have other 3 times properties that I just love them too, because they just executed the business plan so well. But as far as a duration, that one's the winner.
Awesome. Yeah. Thank you. And would you also share any challenging or bad passive investing experience?
Okay, well, my toughest one was probably when we had that deep freeze here in Texas. And we had a property that was over 300 units. I think it might have been 325, 350, but the pipes burst in 200. So you were dealing with a whole water restoration, you were dealing with the insurance, and it took a while for that to unwind. And so many units being unavailable at one fell stroke was difficult. And it was difficult for the partnership team. It was really discouraging for them. And it just ground them down.
Yeah, I totally understand the situation. Thank you. Thank you for sharing that. So, Sharon, what are your next steps in multifamily journey?
Well, the next steps in the multifamily journey, and we've already taken some of them, are to be on a general partner team. We've already assembled a general partner team, and we have made offers on property. We were best and final. We just have not been awarded a property yet. So that's what we're doing. And I'm also really honing in on capital raising skills as well in my second mastermind, which is Raise Masters. So I'm utilizing that mastermind to really help me in the capital raise so I can really benefit more investors, because that's part of my mission. I want people to be able to have an experience that's been as wonderful as mine or better. Better is even better, you know. I want them to really have that journey of wealth and freedom. And that's really kind of what I'm all about. That's what I want my investors to experience with me and
Yeah,
my team.
awesome. So, what markets you are targeting and what size of deals you are targeting as a general partner?
As a general partner at this point in time, just because we want to keep the equity raise up smaller, we're looking at 100 units, maybe 120. So we're keeping in a little smaller equity raise space. And we're staying in the DFW area, so Dallas, Fort Worth, Texas. So we're continuing to look in that area. That's really what we're doing. We are local to Texas. Both my business partner, who is my spouse, and I are third generation Texans. So we know our area of North Texas and we're comfortable touring. So we tour that, and we have another partner who lives in Plano, Texas. So he tours the properties with me. And
Awesome.
he's an
Great.
engineer. So, he's taking all the pictures. I get to do all the talking. We're trying to hit the relational side with the brokers, as well as getting all of our technical information at the same time on the tour.
Awesome. Great. So, are you seeing any good opportunities or are you seeing any challenges in the current multifamily market space?
Well, the low volume is a challenge, and I know that you see that also. So the low volume coming through the brokers, because people are just not wanting to sell yet because their expectations have not changed enough. And so that's why many are holding on to properties, or some of the properties that are coming available might be some of those bridge loan that GP teams that are getting a little crunched. So unfortunately, all of mine is sold except one. And that one is having a little bit of a crunch because they had to fire, and they also had the bridge loan situation.
Yeah, got it. Thank you. So, any habits, any personal habits that are helping you to be successful?
Well, I will say consistency and determination. So you've got to be able to prefer. And especially in this place, in real estate, there are far more men than women. There's a lot of technical people who are attracted to real estate, a whole lot of engineers. And, there's just not as many women. There's becoming more of us than I had first seen in 2015. But you just really have to be consistent. So you have to make those conversations with the brokers. You have to talk to them. You have to know what's coming up. You have to know what they're looking for, and restate your criteria. You have to restate your criteria every conversation. I know I do. But those are some of the things. Really be consistent. And the consistency I'm really working on in my capital raise space. So I'm really working with my future investors a great deal, having more frequent conversations to really let them know what is going on in my journey, because they need to understand where I am in my timeline.
Thank you for sharing that, and very, very crucial thing like consistency is keys for success, right? Yeah, awesome. And would you share any books that impacted your life?
Okay, well, I'm going to share 3, if that's okay.
Sure.
One of them, my first one, is going to be Raising Capital for Real Estate. That is Hunter Thompson. I was at his event and joined his mastermind, so he did sign my book. So I got Hunter, pinned him down to sign that book. And I had received that at another event. I've got Tax-Free Wealth with Tom Wheelwright. And Tom Wheelwright is Robert Kiyosaki's CPA. So seen Tom at other events, love talking to Tom. It's really awesome. And the organization that he has helped us connect with are our CPAs and our bookkeeper. So our goal is zero tax. So we work very diligently with our team to get at zero tax or as close to zero tax as possible. And then my last favorite, last but not least, is The Power of One More by Ed Mylett. And that is told kind of in a really kind of a storytelling style. It does have tips, and I do like that. I will say Tom's book also has tips, and Hunter's does too. Ed Mylett is really more on the personal level, because if your audience are not aware of the story, his father always asked him one more. So as his father was in his last days, he just wanted to be able to do things one more time, have one more day. And so Ed has really broken that down in a nice way, so that you're really focusing on balancing, because so many of us entrepreneurs are, well, our wheel of life is a little unbalanced too often.
Awesome. Thank you for sharing that. All three are like awesome books. Thank you. And how can listeners can connect with you, Sharon?
Well, I do have a website. So it's www.excaliburtexas.com, and I'm going to spell that for you. So Excalibur is EXCALIBRE, Texas, TEXAS.com. So that's where they can find me. I am on social media. So I'm on LinkedIn, I'm on Facebook, I'm on Instagram. Yeah, you can find me. And you can even see some of my other podcasts on YouTube.
Awesome. And
Go to that website, excaliburtexas.com.
awesome. Thank you very much, Sharon. Thank you for sharing your journey, single family to multifamily, passive investing, now to moving towards active side. Thank you very much.
Well, thank you so much for this opportunity, Rama.
Sure.